Why am I not a successful trader? A lot of you guys coming across this video right now are asking that to yourselves in the morning, right before the close, looking at your P&L, wondering how can I not make consistent money in the market? What am I doing wrong on a daily basis to the point where I literally cannot pull a couple $100s a day consistently every single day from the stock market? So today I'm gonna get into the 3 reasons why you are not a successful trader right now and how to fix them. Let's get right into it. So the first reason why you are not a successful day trader right now is because you have the wrong expectations. Especially if you're a newer trader, you might have the wrong expectations going into actually trading. So you might think, you're going to turn your $1,000 account into $100,000 in 1 year, and sure, while that on the spectrum of possibilities, that might actually be a possible scenario for you. In all likelihood, that probably won't happen. It would be amazing even if you could turn that $1,000 account into a $5,000 account or a $10,000 account. Start to break up your goals into little micro segments so you can actually have more manageable and realistic goals. You always should have that long-term goal of having, that $100,000 account or that $150,000 profit, overall on your account in the back of your mind, but you still got to break things up and keep them very realistic for what the actual situation is for you. So with that being said, we always recommend people start with $5,000 to $10,000 and look to scale that over PDT, that $25,000 mark. And the first year, and like Matt Sentes, for example, turned 7,500 into over 200 grand basically trading stocks. So anything is really possible. I turned my $5,000 account that I blew back down to $2,500, turned that back around over to PDT within around 8 to 9 months, and I felt very accomplished with that. And how did I do that? I kept my expectations very, very realistic. I scaled my account slowly. I did not try to go for that home run trade every single time. Sure, there were times where I knocked it out of the park on something that ran a lot harder and a lot more than I really expected it to, but I still kept that realistic expectation in the back of my mind of making just a couple $100s at first per day, and then slowly from there scaled it up. So that's the first thing. Keep those expectations realistic, still have the bigger picture in mind, but keeping it realistic and your expectations a little bit lower than what you would when you're very excited and ready to go on that new account is what's going to keep you very level-minded, very settled, and keep your control very controlled. So the second thing, guys, is you might have poor risk management. What I look for every time when I trade is 3-to-1 risk reward. Why? Because that means I could have a 33% win rate and still break even on my trades. Minus commissions and such, but we'll leave that to the side for now. Keeping yourself the odds skewed in your favor whenever you're actually trading is what's going to make you have a very prolonged and successful career. If you're just taking trades that are 1-to-1, you need a very high risk or a very high win percentage to actually make your account grow in a safe manner and scale that thing. So by keeping your odds 3-to-1 versus how much you risk versus the reward you're looking for is going to allow you to let your winners be much larger than your losers, growing your account ever so slightly and getting up to that target number on your account that you really wish to have quicker. If you stick to that risk reward ratio 3-to-1, your losses are only that 1R or basically how much you're willing to risk per trade every single time. So for example, say you're willing to risk $100 per trade for a $300 reward. That's 3-to-1 risk reward. If you stick to that $100 mark and you get hit 3 times in a row, that one trade that you win should be $300 or more. But every time when you're trading, you need to make sure that you're cutting your losses at that 1R level, that amount that internally, in our scenario there, that $100, that amount internally that you're fine with losing per trade. The amount you risk per trade should not be anything that makes you feel uncomfortable, but internally you should feel very comfortable in that scenario with losing that $100 because your strategy basically gives you more of a probability to win on trades. And if you hit that one winner, it's going to cover 3 losses. That $300 winner is going to cover those 3 $100 losers. So keep the risk controlled 3-to-1 all the time. Make sure that when you're actually trading, that dollar amount that you're risking is something you're internally okay with. In my opinion, I keep it to a number that I'm okay with losing 3 times at the open in 1 day. So for example, for me, it's $350 right now. I'm willing to lose that 3 times in a row. That's perfectly fine with me. If I lose it 3 times in a row at the open, I shut my screen off, cut it and I'm good. But that is personally my thing because I'm looking for those $900, $1,000 games. Again, goes back to the last thing. I'm trying to just make $1,000 per day, $2,000 per day, $3,000 per day, or $1,000 per trade in this scenario. And I'm not trying to hit these huge home runs right now. I'm trying to scale my account ever so slightly, slowly, and that's really how you become a professional in this game and stay here for a long period of time. You don't want to over leverage yourself. You want to keep that risk controlled and make sure that you're keeping it very, very structured. 3-to-1, follow it. And the third and final reason why you are not a successful trader right now and how to fix it is because you don't have a firm and solid process. So what a process is, it's essentially your strategy. It's how you attack the market every single day and trade properly. For example, are you trading large caps? Are you trading mid caps? What are your core patterns? What is your playbook? If you don't have an actual playbook, if you can't sit here and tell me what trades and what patterns work the best for you and have the highest probability of working out for you, then you don't have a playbook. You do not have a strong process. What we teach at Iconic is our process. It's the FOOS4 system. We have shorting, swinging, intraday trading. We have the F patterns, the FU breakdown, the over-under short, etc. That's all stuff that is part of our process and our breakdown that we weave together with the risk-reward parameters I just talked about beforehand, because all of these patterns in the process that we teach have a high probability of working out every time they show up and occur in the actual market. And when you weave that together with proper risk management, proper sizing, and low expectations of not wanting to, or proper expectations, of not wanting to knock every single trade out of the park, you are going to be a successful trader. So make sure that you're following a system that has been proven to work. Cameron Foos has been trading this FOOS4 system since, around 2010 or even before that. And Matthew Sentes has, crushed it since he started trading on this system. I've been killing it since I started trading on this system, and so have a ton of other students that have come through Iconic. A process is as strong as a length of time that it's actually worked and proven itself in the market, and the one that we teach works fantastic, and it's been working and it will continue to keep working. All in all, a process is something that you can really specifically break down and tell me face to face, or any other trader, even your girlfriend, boyfriend, parent, whatever, face to face. This is what I trade. This is when I pull the trigger on this pattern. This is why I'm pulling the trigger here. This is how much size I'm going in here. If you don't have that and you can't write that down in a playbook for me or tell me, then you don't have a process, and you need to get back to the drawing board, watch some training, follow some traders, look at what professionals are doing on a day-to-day basis, and really try to fine-tune that process. That is step number 3 of why you are not a successful trader, is because you don't have a process. So that wraps up the 3 reasons why you are not a successful trader in today's market: having high expectations from the start, no risk reward, and having no set true process for your trading. So if you like more of this, down below we're going to have a link for our free training, which covers, basically our whole system from A to Z, basically the same training I went through, Matthew Sentes went through, to actually kick our careers off, and tons of our other students to actually get us jump started in the day trading career. Right now I'm getting ready to graduate college and become a professional trader right afterwards. I'll be just working for myself. It's the best feeling in the world. Independence is amazing. Freedom is amazing. But yeah, click the link below, follow us on social media as well, and let us know if you have any questions. Comment below, and we'll see you next time.